Okay, let's just get right into it. Building a 1 crore rupee portfolio? Yeah, it's really not some exclusive secret locked away for the ultra-rich. Today, we're diving into this explainer to unpack a super practical, step-by-step roadmap. We're going to completely take the guesswork out of wealth creation for you. As you'll see, combining smart saving, disciplined investing, and well, just a little bit of patience can literally transform your entire financial future. So, imagine waking up one morning, checking your bank app, and boom, you see this exact number staring right back at you. A net worth of 1 crore. Now I know, for a lot of us, waking up to that kind of wealth sounds, frankly, impossible. It feels like something reserved for celebrities, big-time business owners, or maybe people who just randomly inherit a fortune from some long-lost aunt. But today, we're going to completely dismantle that belief. If you scroll through social media for even 5 minutes, you're just bombarded with these crazy illusions of massive overnight profits. But look, the reality is completely different. True wealth building, it's not a flashy fireworks show. It's much more like the quiet, gradual growth of a tree. It's actually a highly accessible process, even if you're a complete beginner, as long as you have the right blueprint in hand.
Here is the roadmap we're following today. First, we'll look at the Crore portfolio reality. Second, building your financial foundation. Third, the compound growth engine. Fourth, strategy and market psychology. And finally, how to accelerate and keep learning.
All right, kicking things off with Section 1, the Crore portfolio reality, breaking the illusion.
So let's go ahead and shatter that illusion right now. What if I told you that hitting that 1 crore mark is actually way less about landing some massive top-tier salary and much more about just sticking to a simple plan over time? Honestly, so many everyday young professionals, teachers, middle-level managers, they end up retiring wealthy. And it's not because of a crazy high income. It's simply because their everyday, boring decisions added up to absolutely extraordinary results. Moving right along to Section 2, build your financial foundation, securing your base.
Okay, so before you even think about investing, you absolutely have to secure your base. Step 1, you've got to track your income and expenses. Seriously, people are always shocked to find out how much those random, forgotten streaming subscriptions or those daily food delivery orders are just silently draining their future wealth. Once you plug those annoying little leaks, Step 2 is building an emergency fund. And let me be clear, this is the absolute, non-negotiable prerequisite before you ever hit Step 3, which is long-term investing.
Let's zoom in on Step 2 for a second. Your emergency fund is basically your financial safety net. It's there specifically for those completely unexpected curveballs. Medical bills, a sudden job loss, or maybe some urgent car repairs. Now, why does this matter so much for young professionals? Well, because having this cash buffer means that when life inevitably throws a wrench in your plans, you aren't forced to panic sell your long-term investments at the worst possible time just to survive. Your investments get to sit there, entirely untouched, doing their thing. Now for the fun part. Section 3. The compound growth engine, the heavy lifter. With our foundation locked in, we reach the real heavy lifter of this whole strategy, compounding. This happens when your returns start generating their own returns. It's literally like a giant snowball rolling down a hill gathering more and more snow. To put that into perspective, say you invest just 10,000 rupees a month at a 12% return. You don't just get your initial cash back. Over 20 years, your money starts making its own money. And eventually, the interest you're earning completely dwarfs the actual cash you put in. It's a total game changer. Here's the thing. Time is, without a doubt, your most valuable asset. Picture this. Investor A starts at age 20, putting away just a small amount every month for 10 years. And then, get this, they completely stop. Done. Then you have investor B, who waits until they're 30 to start. They have to invest double the amount every single month just to try and play catch-up. But because of the sheer compounding power of time, investor A almost always still wins. The real cheat code here isn't about perfectly timing the market. It's about time in the market. So the earlier you start, the better off you're going to be. Which brings us to Section 4, strategy and market psychology, navigating the ups and downs. All right, so the engine is running, but we need a solid strategy to actually protect that wealth. I know a lot of beginners sit there wondering, okay, but exactly where should I put my money? Well, that's where diversification comes in. It simply means you're not putting all your eggs in one basket. By spreading your investments out across different opportunities, you seriously lower your risk. That way, if one investment totally tanks, it doesn't drag your whole portfolio down with it. Because of this built-in protection, going the diversified route is generally way less risky for beginners. Right alongside diversification, you absolutely need consistency. Consistent, automated investing is hands down your best tool. I'm talking about setting up an automatic transfer the exact day you get paid. You set it and you forget it. Doing this completely removes the crazy emotional stress of trying to guess the perfect moment to buy into the market. It lets you just chill out and focus squarely on your long-term goals, instead of sweating over daily price bumps.
And this brings us to a somewhat harsh, but totally vital truth. Wealth building is, at its core, a massive test of patience. Listen, there will absolutely be times when the markets are soaring and times when they take a nosedive. Those ups and downs? Completely, 100% normal. The real secret sauce here is just maintaining your discipline. If you can avoid making snap, emotional decisions driven by sudden panic or even sheer excitement and just stay glued to your plan when things get rocky, will you position yourself perfectly to win big when the market inevitably bounces back.
Finally, let's jump into Section 5, Accelerate and Keep Learning, the cheat codes for faster growth.
Okay, pay attention, because here is the ultimate wealth-building cheat code. If you really want to hit the gas on your journey, you have to widen the gap between what you earn and what you spend. Going out and earning more, whether that's through upskilling at your job or crushing a side hustle, is fantastic. But here's the catch, and it's a big one. You absolutely must avoid lifestyle creep. You know, when you make more so you suddenly start spending more? Yeah, don't do that. Here's a pro tip for you. Every single time you get a raise, immediately automate that exact extra amount straight into your investment account before it even hits your checking account. If you can keep your everyday living expenses totally flat and funnel all that new income directly into your investments, you will be amazed at how fast your wealth grows.
And honestly, when it all comes down to it, the single best investment you will ever make is in your own financial education. Seriously, keep reading finance books, watch high-quality explainers like this one, and above all, just stay intensely curious. The more you actually understand the nuts and bolts of how money works, the less scary and intimidating the whole thing becomes. Building up that financial literacy is exactly what empowers you to confidently manage your money for the rest of your life.
So what's the big takeaway here? Building a 1 crore rupee portfolio isn't about crossing your fingers and hoping to get lucky. It's just the simple math of smart, consistent decisions. And remember, the actual amount you start with matters so much less than simply building the habit of getting started. So I'm going to leave you with this to chew on. Take a good hard look at your bank account today. What is the single smartest decision you are going to make in the next 24 hours to actually secure your financial foundation?